Good evening, everyone. Welcome to the October edition of Fintech Drinks. We're kicking it off tonight where I didn't want to just be alone on screen. I have my colleagues here, Gigi and Nina. How's it going?
Hi, everybody.
Good. Hi, guys.
I wanted to see, I see the chat is already very active. I'm happy so many people are already connected for the networking as of 5 p.m. That's great. We have now the next hour where we'll be in this area on the stage where very shortly we'll be kicking off this fantastic panel about customer experience in the financial industry, followed by a Q&A. But as the tradition has been over the last couple of months, we kicked it off by showing you what the beverage of choice was. Tariq is still on thinking I'm going to do Jaeger bombs. Still not the case. But I wanted to kick it off. Nina, what are you having? What's your beverage of choice this evening?
This is white wine Chardonnay for me tonight. Maison Latour. Very good wine.
It's a vintage, a Reserve.
I wouldn't say vintage, but it's decent.
Yeah. It's drinkable.
It's drinkable.
Perfect. Gigi, you?
I am having some very boring coffee, but I am contemplating turning it into an Irish coffee very soon.
Okay. Coffee from where? Do you pick your coffee, or it's from a cafe, or you made it yourself?
I made it myself.
Yeah. Nice. All right. For me, I was trying tonight, I wanted to align it with the theme of the evening. And since we're speaking about customer experience, I tried to think which beer or wine offers a good experience. And what I came up with, which also fits with this gloomy weather, is a Guinness, a beer. Because in the Guinness cans, maybe you could hear it, you have that little ball that foams the beer as you pour it. So hopefully I don't make a mess, but I find you're not just drinking a beer, you're having an experience when you open it, and just like looks lovely. So
amazing.
It's just the top. Oh, and it's all over my notes, but that's okay. I thought it would work, but
well, cheers.
That's what happens when you have a live show. Anyways, Gigi, Nina, thanks for joining me for this first part, and we'll get the show going. Cheers to everybody. My name's Nick Belliveau, if we've never met before, the head of marketing at Fintech Cadence. I'll have the pleasure of being your host and moderator this evening. Tonight is sponsored by EY and Expertus, who have been our co-title sponsors for this whole online series of Fintech Drinks. So thank you so much, EY. Thank you, Expertus, for making this event possible. This month, we also have an October sponsor. So goeasy is sponsoring tonight's edition. So thank you very much, goeasy. And we're very happy to have Corby on the panel as well from goeasy. And we'll meet him very shortly. We have a fourth sponsor, also an October sponsor, Finovate.io, who's coming in. So thank you, Finovate, for supporting the fintech community. It's greatly appreciated. All right, if you're new to Fintech Drinks or new to HOPIN, maybe you're not sure how this platform works. Hopefully you're now with us on the main stage area. You'll see on this side of the screen is the chat. If you have questions, if you want to answer our questions we'll be asking you, please write it in the event side of the chat. And well, right now, if you didn't already, please introduce yourself. Let us know where you're tuning in from and what brought you here this evening. On this side, you'll see a couple buttons. So right now, while you're on the stage area, and then later, you'll be able to go to the networking area where some people were just before this to meet some of the great participants we have from the whole fintech community in Canada. The agenda of this evening, I'll be quickly running through a bit about Fintech Cadence. We'll then be diving into the panel just after, a 30-minute panel, followed by about 15 minutes of Q&A, 20 minutes of Q&A, and then ending it with the networking session. They'll be open until 7 p.m. Eastern Time. So, Fintech Cadence, if you have not heard of us before, we're Canada's fintech community. We're Canada's fintech hub, where we really try to bring together the whole fintech community across Canada. We really focus on developing future fintech leaders, and we do that through our 3 pillars. These are education, support, and collaboration. And they break down through our different programs and events that I'll run you through right now. So our main 3 programs are the Certificate, Ascension, and Formathon. The Certificate is a 12-week program that really teaches you the ABCs of what FinTech is all about. Fintech Drinks is a great way to learn about FinTech, but the Certificate is really a deep dive with industry experts that teaches you all the fundamentals, everything you need to know really about the basics of FinTech. And there's a contest going on right now for that I'll speak about just a bit later. We have our Ascension program, which is a early stage incubation program for FinTech startups in Canada. That kicks off this February and applications are already open. We have an info session, by the way, tomorrow. So if you have a FinTech startup that you'd like support, definitely recommend you to check out the Ascension program. It's essentially the essential starting point for any FinTech startup in Canada. Lastly, we have the Formathon, which is Canada's biggest open innovation competition in FinTech. This comes around every spring where people get to try to build a FinTech startup. Been saying FinTech startup a lot. Fintech Drinks is the event we're here at this evening, which is a monthly event. FinTech Career Fair, which is a gathering for anybody looking for a job in FinTech. And University Series, where we go around different universities in Canada to introduce students to financial technology. All right, I was mentioning the competition, the contest rather, for the certificate. So it's a $600 program, but we're offering the chance for 2 lucky people to win it for free. The contest ends this coming Sunday, and the winners will be announced on Monday. If you are interested in doing the certificate, we invite you to apply. All you need to let us know is why you're interested in doing the certificate. You'll see in the chat, my colleague Gigi will shoot the link of this contest. And tune in next Monday. We'll be having a short info session to deep dive on what the program is all about, as well as announce the winners. And sneak peek for those of you here listening this evening, even if you don't win, next week for 3 days, from Monday till Thursday, we'll be offering the certificate at 50% off. So you're the first to hear. It'll be at only $300 for 3 days. So if you're really interested in doing it and you don't win the contest, it's the best price you'll be able to get. So check that out. This is a competition, keep mixing those up, that opened up a little while ago, and the top 30 were selected. It's the Desjardins FinTech Challenge. It's a competition where one team will be accepted into the Startup in Residence program of Desjardins and win $25,000 cash prize. Tonight, we're excited to have some of the top 30 here with us this evening. If you're one of the top 30 startups, I invite you to say hi, let us know your startup name in the chat. And well, for all of you listening, you could all meet them in the networking session afterwards. So I think that's a great opportunity to introduce you to some of the new rising FinTech startups in Canada. Whew, good. I think that was quick enough. 5:38. I think we could now move on to the part you're all here for, the panel itself. So at this point in time, I'd like to welcome the 3 panelists on stage. Abdulah, Corby, and Mahima, you could please join me on stage.
Hi there.
Hello.
Hello, everybody.
Good evening. How's it going?
Very well, and you?
Good. My notes for this evening are completely ruined. I don't know if you saw my mishap earlier. I thought it would work. It normally does. But in any case, thank you so much for joining us. I'd like to start by going around the table for those who perhaps may have not heard of you, for you to introduce yourselves and your company in about a minute. Mahima, if you don't mind, I'd love to start with you.
Sure. So I am the Senior Vice President of Digital Strategy at Equitable. My background is more in management consulting. I'm a bit of a recovery management still. Sorry, I'm not sure what that is.
I hear a lot of background noise as well. I'm not sure where it's coming from.
Sorry, that's not me. anyway, recovering management consulting was with the Boston Consulting Group for about 8 years, mostly in the Toronto office, but also out of London. I joined Equitable Bank 5 years ago, and Equitable is Canada's 9th largest bank, even though many of you probably haven't heard of it. We have 35 billion of assets under management. And where I spend most of my time and energy is EQ Bank, which is our direct consumer digital platform. And really, it's a deposit taking platform. So we have over 150,000 customers, 4 billion deposits. And we're growing every day. Super excited about what we've been able to achieve, and love been able to sort of carve out a new niche in digital banking in Canada.
Awesome. Thank you, Mahima. Yeah, I'm not sure if the audio background, if it was on Abdulah or Corby's side, but we'll keep on going, and maybe we'll just mute as we go in any case. But Corby, I'd like to move on to you next. If you could please tell us a bit about yourself and go easy.
Yeah, it might have been kids screaming playing video games, so I'm just muting myself when I'm not talking. So hi everybody, Corby. I run goeasy. So we are sorry if you can hear him. I'm like banging on walls to get him to be quiet. Don't let your kids play Fortnite after 5. That's the trick. And you know, really come at things from the perspective of you know, client experience, data and analytics, and marketing kind of. So yeah, that's,
okay. Thanks, Corby.
It
comes with the game of online events, so no worries there. I could imagine Fortnite's a pretty intense game. Abdulah, on.
It's all good. I just sent somebody.
Abdulah, for yourself, could you please tell us, a bit about your experience as well about Expertus?
Absolutely. So my name is Abdulah. I'm the Chief Business Development Officer at Expertus. Expertus is a Montreal-based fintech. We offer payments and cash management applications to banks and large corporates. So we are really in the B2B section. That's going to be a little bit of the approach that I'm going to be bringing today. At least you know, the experience or the customer experience from a B2B from a fintech that's in the B2B market. I joined Expertus about 5 years ago, and I joined in at the operational support team, and then I moved my way to the sales and customer experience side. So I'm going to be talking about the overall experience that we have with a client from that starts at the early starts of a sales process all the way into an ongoing relationship and building on that relationship.
Awesome. Yeah, I think that's interesting, the dynamic we have this evening with two companies more customer-facing side, B2C, and then with Expertus on the B2B side. Before I get into my next question, I want to ask a question to the audience, if you are willing to answer in the chat. It's actually going to be 2 questions. The first is, I would love you to answer the question, which company, non-financial services company, offers the best experience, in your opinion? So which company outside of financial services offers the best experience? And let us know in the chat. You could let us know many companies that you think offer a great experience. I'd love to hear your thoughts. As they're typing that in, I'll move into my question for the panel. And ask you, well, why in the financial services sector it's important to consider customer experience. What's the main reason why we should really focus and have these conversations around the importance of customer experience? Mahima, I saw you nodding, so maybe we'll kick it off with you.
Sure. I mean, look, I think if you look at the data, customer experience drives better value for obviously not only your customers, but for shareholders. So the research that we've done shows that a customer who is satisfied with the customer experience has far more loyalty than a customer that's not. We've even translated that to lifetime value, and a engaged customer, so again, somebody that rates you with high NPS or is generally satisfied with your offering, is 6 times more valuable than an unengaged customer from a lifetime value perspective. And so, I mean, I think it seems kind of obvious to invest in higher loyalty, higher retention, and then higher lifetime value and shareholder return, all of which keeps every stakeholder happy.
Yeah, absolutely. I think that's a super interesting stat that you're able to give us. I want to move into my second question, and I see a lot of people are answering the chat. I like Mark Phillips' answer, his best experience from massage therapist, Spotify, and Disney World, others. Could you now tell us which financial services company, whether it's a bank or a fintech, offers the best experience in your opinion? I have an idea what a lot of people are going to say, but I would love to see some different answers. So which company, fintech, bank, neobank, challenger bank, whatever the case may be, financial services sector that offers the best experience? So now I'll move on to my second question for the panel. So we know why it's important to invest and focus on customer experience. But then how do you actually do that? There's so many different building blocks to make that experience. Corby, could you tell us how we could start? Like, what's the maybe base recipe for offering a good customer experience? What should people look for? Oh, I think you might be on mute, Corby.
I use the manual button.
We have 3 different mute buttons again.
I got
you. You have one on the mic, one on the laptop.
Oh, good. I was saying to the previous comments, you know, I think obviously as we think about a lot of sort of look-aliking in products and offerings from different financial services institutions, you know, customer experience and sort of the experience that someone gets through the relationship with you becomes one of the differentiators. And to do that and to really build it from a foundational level, there's a couple of key things. You know, one, do you even know what that looks like, right? Like when you're thinking about the ideal, how do you even design it? And no offense to anybody here who works at a fintech or a financial services institution, we're not the customer. And your CEO isn't the customer, and your contact center agent isn't the customer. The customer is the customer. So you need to understand what they're looking for and really model that out. Ask them questions. Look at see why they're leaving and see why they're coming. And that ultimately means you need a really good infrastructure of data, of analytics, of storytelling. And so those core fundamentals of knowing what you're trying to achieve, how to get the information, and then the true analytical capabilities to then, you know, determine what are those points. You know, I always say it's really easy to ask your customers questions and get feedback and surveys and responses and put the little, like, you know, feedback button on the side of your webpage. But if you also don't have the wherewithal organizationally to then commit the capital and the projects and the resources to then do something about it, then don't even bother starting down the path. So it's that combination of what are you looking for, the data and insights and mechanisms to get it, and then the wherewithal to say, once we've learned something, are we actually prepared to do something about it?
Yeah, well, I think that data component is extremely important and so much more accessible in a certain way with just apps and online banking. You're able to get those touch points, and without them even giving you information, you're able to collect a certain level of information. And we'll dive into that a bit more after. But Abdulah, I'd like to move on to you. And from the B2B side, it's much more relational, I guess. You have much more contact with your customers versus a brand being a contact. What are some of the maybe the main differences you see for building a B2B experience?
Yeah, it's gonna be. There's always similarities between the two. I mean, the final objective is to improve on that customer relationship. But on the B2B side, the length of the relationship and the amount of interactions there is between different employees within the company and the client is kind of the main difference. So the way that we see this on our side, there is, you know, throughout the relationship, there is multiple aspects and multiple pillars that need to be focused on. So this is where, when you're in the early stages of a sale, the focus is going to be on knowing your customer. Similar to what Corby said, this is where you want to get as much information as possible on the client, making sure that you're advising them in the best way possible. Whereas after the signing of a contract, this is where you're kind of in the honeymoon and you're looking at delivery. This is where the transparency and the integrity, is the main focus, where you're talking to the client day in, day out, and making sure that delivery goes smoothly. And then once it's delivered after go live, this is where you want to try to empower the client as much as possible, make things easy, provide insight. That comes through the application, through the platform that you're delivering. And then obviously there's the ongoing approach where, you're looking to be able to be as responsive as possible, to be as responsive from a customer response point of view, but also adaptability of the platform. So if they need changes, you need to be able to adapt as quickly as possible. So that's really for us the overall preview of all the different aspects of that relationship that need to be maintained and need to be maintained at a high degree, at a good customer experience degree, to make sure that the overall relationship remains good.
Yeah, and we're speaking earlier in our preparation talk how you guys you do monthly touch points with your customers. Could you tell us a bit about that quickly?
Absolutely. So on the ongoing, so that's the final stage. So after the platform is delivered, we have a governance structure where we are sitting down with the client on a monthly basis. So that's where we bring in folks from the operations team, the support team. We'll bring in the CEO might join there as well. We'll have folks from the account management as well. That's where we'll sit down with the client. And there are different departments as well, because the client for us is not necessarily a single person, but the business side at the bank. It could be the a treasury department. There could be some folks from the support as well, and operations and infrastructure and security. So that there is that group of about 10 to 15 people that we get together on a monthly basis to review the overall relationship, review the operational status of this relationship, and obviously define if there's any improvement that need to be made. That's what we use to gather feedback from those clients as well, ask them questions about the customer relationship, make sure that if there's anything that needs to be brought up, it is brought up, and then we'll take that over and try to work on it so that when we come back the following month, we have already shown improvements as well.
Yeah, no, I find that's really neat, and it must take a lot of work, but I think it's important to, especially in times like these, you innovate or die trying, as so much is changing. With, like a large company like EQ Bank or goeasy that has many clients, because I think at Expertus you guys have,
we have about 40 clients. We're really in the B2B. There's less amount of clients. Bigger clients, or like the relationship is much harder to maintain, and then a lot less change as well. So those clients tend to stay for 5, 10, 15 years, and the contracts are rather long as well. So there's not a lot of drop off.
Sure. So with like 40, it's a magical, relationship to have that direct contact. But at EQ Bank, for example, you have thousands upon thousands of.
We're at 155,000, I think.
Something like that. So
how do you don't get them on a monthly basis?
All your customers. How does an EQ Bank go about having those conversations or is it just like forums? How do you guys manage that relationship and try to get insights out of your customers?
Yeah, I mean, we have a pretty robust internal research process. So, and it's, I guess, in the hypothesis phase, we have a customer council. So, kind of VIP customers that we can have ongoing discussions with to really start to get at the deeper insight of why customers are using the product, how would they really feel about different ideas that we have, to try to understand that feeling side of it. From there, we take hypotheses and then go and test them through more quantitative approaches. So we have biannual surveys as well as ad hoc surveys to our customer base to get their feedback. And that also allows us to measure how we're doing in general. So, NPS overall, but then different categories of our product and full-on customer experience. How are people feeling about it? Where can we improve? We try and keep it open-ended, but it's obviously kind of difficult to do in a survey. And from there, I mean, we also do focus groups. So a lot of traditional forms of research to try and get at the insights. I think like the biggest challenge though is like that whole Henry Ford reality is like when you ask your customers what they want, they're going to say they want a faster horse. And so that is definitely like the big banks in our world define so much of what people are used to and what they think they want. I'll give you a really simple example. So we are rebuilding our e-transfer experience, right? And the whole element is around like, how do we add delighters in this experience that has become so common and like it looks exactly the same across the banks. So how do we start to add some delighters? And it's such a commonly used feature. And so we started testing things like simple things like, would you want the ability to send a recurring e-transfer? And the feedback was so negative, like, oh no, I would never use that. I don't use that right now. And I was like, well, you don't use that right now because you can't. And so like, simple, but like, and maybe that's not a good idea, but little things like that where it's like,
sounds like a faster horse.
Yeah, exactly. I'm like, you don't even want this faster horse. It's not even like leading edge or anything. So, I think there is a space for that kind of traditional research. Admittedly, we know that we need to start doing more like ethnographic research and get deeper into the unstated needs. We haven't started doing it yet. COVID has obviously made that a more difficult reality, but we have a big focus in 2021 to try and get at those deeper insights of how we can humanize the financial services experience beyond just what customers are telling us.
Neat. I'm curious to know like what the team looks like that makes this happen. Is it all internal? Do you have like a large team focusing on this, or do you externalize some of these surveys?
We have a customer experience expert with like a deep research background, and she has a team of 4 underneath her to help run all of this. And then we do leverage our agency partners on the brand side for brand research, focus groups. But I would say like the thinking and strategy is all done internally.
Okay. Corby, on the goeasy side, what's your approach to figuring out what your customers think and measuring their satisfaction?
Yeah, so we approach it from a number of angles. We do actually do quite a bit of primary research, and we've built a custom segmentation that covers off a lot of elements about who the customers are, and it does get down to the granularity of certain information about their values, their beliefs, not just your sort of typical socioeconomic and sort of ethnicity, like the kinds of things that normally there, we kind of go a layer deep. And so much of that is because when you think about the relationship you need with your financial institution, these are big decisions. These are impactful decisions. These are anything from borrowing money to buy a house, a place that you need to feel safe and secure. And so those things become very, very important. And it helps you, first of all, think about how you want to communicate. And that's more from an outbound marketing. But then the flip is understanding the kinds of servicing and needs that people are going to have. And it could be as simple as, we all have this fantasy that we can be 100% self-serve digital platform in the palm of your hand in an app that nobody has to teach you how to use it, right? And the reality is that's not the case for everybody. And we all probably have 155 or so thousand customers, or a couple 100,000 customers, or 40 customers with a number of people that work there. And we probably send them emails and messages and marketing. And do we even track and monitor, do they even ever open them, right? And what would you do from a client service experience perspective if you kind of knew that 10% of them never opened it? They rarely log in. Would you start to think about ways to connect with them through different channels that might be more costly, that might be less beneficial to you as an organization, but are the way they want to talk to you and they want to interact with you? So, really again, understanding from the research based out, and then thinking about, are you willing to take on the responsibility of supporting customers in the way they want to be supported, as opposed to always pushing it? Because if you're always pushing, it's okay. There's nothing wrong with that. But you got to understand it's not going to be for everybody, and you will cap your market potential based on the customer segments. That's why it's really important to understand them in the first place.
Okay, cool. I think that makes sense. I want to bring it back to the question I asked the audience about the fintech or bank that offers the best experience, and I thought Wealthsimple came up quite a bit. So I kind of want to start like a open debate and see in your opinions which Canadian or North American fintech offers the best experience, or which rather verticals are performing really well in the customer experience space, and maybe why that's the case.
Sorry, was that me?
If you want.
Sure. I mean, I think Wealthsimple is a really interesting one. We talked about this a little bit when we all connected the first time. I think they've done a fabulous job around branding, and so there's this perceived excellence around customer experience. So I know customers like how it looks. It's obviously simple to use, and then I think this whole brand affinity around Wealthsimple has really helped them in terms of standing out among the pack. I will say, like, I think there is serious drawbacks to their experience, and it's primarily around like back-end infrastructure. So their payments infrastructure is quite painful if you withdraw money or deposit money, and when you're especially around their trading platform, which is more real time, and speed is critical to trading decisions. So that kind of limitation where it takes like 7 days to withdraw, or it takes I think it takes like 4 or 5 days to even deposit. Like, you can't make trades in a short amount of time. So anyway, I think they've done a really nice job with the marketing. I think the look and feel is quite nice, but there is some real experience flaws that should be addressed. That being said, like, customers still come to them in drones, so they're doing something right. In terms of, I guess the other part of your question is which companies or industries don't have fabulous customer experience. And I think in a lot of cases, it's tied to a regulatory environment or a regulated nature of the industry. And I'm not suggesting that if an industry is regulated, it doesn't mean they can have a good experience, but there's high barriers to entry into those businesses or industries. And so I feel like there's a little bit of there's less pressure on those companies. So about airlines, especially in Canada, I would definitely say that's the case. Telecom is probably similar. And then banking, I'm like too familiar with, but when you get into like FinTrack and the FCAC and all of these regulatory bodies that put restrictions or maybe a whole bunch of things you have to jump over to get there, like, I feel like it can create a less refined customer experience. And this idea of the second line, like the risk management teams and the compliance teams, and there's this constant oversight and layer to everything you do and every customer experience that you try and build. And it is extra challenging because the regulator is God, for lack of a better word. So.
But Mahima, that's interesting. And you're kind of it is a little bit more difficult to go over those hurdles of regulators and all. But all the different banks have the same rule. They have to follow the same rules. So why do some focus more on customer experience and make sure that that experience is, that they're trying to improve on that? They still have to live with the same hurdle as the big banks that, maybe care a little bit less as on customer experience. They still have to live through that same hurdle. So that's, I don't see it as a reason to offer, less quality or focus less on customer experience.
No, I think you're right, but like when you're in the trenches of it, it kind of depends on the second line teams that you're dealing with. So like, I'll be honest, I think Equitable and EQ do a fantastic job, but we have a very, very low tolerance for regulatory. So the hurdles that we kind of have to jump through to make sure that our compliance and risk teams are comfortable, or the level of risk that they're willing to take when it comes to the regulator, can be very different than another organization. And I think the really high thresholds for low threshold or high thresholds for, I don't know, whatever coding. And so it's just like, if you want to get something out, like Corby mentioned this, that impetus for action, you're going to have to make some sacrifices sometimes for the benefit of getting something out in market. And we'll obviously try and do our best to keep the customer experience as pure and seamless as possible, but it can be challenging.
Agreed. I'll add to that. I'll go ahead, Corby.
Go ahead. I was going to say, so I spent 8.5 years in telco and 3 years at a big bank. So I've kind of hit the regulatory. I think, to your point, Mahima, that like there is a bit of a hurdle, though I will say, like to Abdullah's point, like, wouldn't it all be the same? And so and this is a real story, like very early on in my big bank days, I sat down with our chief risk officer because we were talking about implementing a digital technology to enable more personalization, a DMP, not that scary. And in my conversation with her, reports to the CEO, massive tens of thousands of people in her org. And for the first time, and I don't know how many people know this, I'm sure a lot of you do, that from the regulatory perspective, OSFI actually mandates that the big banks do not bonus and incent their risk teams on growth and success of the business from a financial returns perspective. And so, there is to Mahima's point, a fundamental internal conflict in large FIs that while most organizations in other verticals can say, what do you mean? You can make people happy and grow your revenue at the same time? Like, duh, right? That's like, we've all gotten to that point around NPS and investment. And even telco has gotten there. And I think, the example of, I was there through the Roam Like Home transition at Rogers, where, all of a sudden you take a massive internal 1-year revenue hit because you say, I'm not going to charge you over and above to go, buy a travel pack while you burn your dollars at home that you can't use. And all of a sudden everybody's happy. The NPS goes up. You unlock customers' behavior because now they're not scared to take their phone to the Caribbean vacation. Like, what's the bank version of that? And until we figure out how to work with the regulatory body, and to your point, Mahima, it's interpretation. Every CRO at every FI, there is no black and white. There's no charter of rights and freedoms. There's no law book that you're going to get arrested. It is interpretation. And so the tolerance level of risk, this is a defensive offensive game. And if you work for people who are defensive, I do believe you will take the route of, how many people did we lose today? How many customers did we lose? And you're going to make it preventative to lose, as opposed to a CEO or a leader who comes in and says, how many people did you make happy today? And just think of the cultural shift in your organization. If all the CEO did was every day come in and say, how many people did you make happy? You're going to do things to make people happy. Some may leave. That's okay. You're not putting in preventative measures. You're investing in the right direction. So I
think that's a great point. And it brings up the idea, the Rogers example, at least, where you changed the pricing model. We spoke about that also in our call. It's, when we think about experience, we often think about the UX, the design, but the product itself is also part of the customer experience, right? And the price, freemium or lower cost. I'd love to talk about that a bit. How you guys view the importance of a good product and the pricing of it in the experience itself. Mahima.
Okay.
Mahima, Abdulah, we could go to you as well on the B2B side, but maybe let's start with the B2C side since we're still on that topic.
Yeah, I mean, like from EQ's perspective, I would say product is like number one critical component of our customer experience. Like we obviously try very hard to make it an easy and simple customer experience, but if you took out the product advantages and you made it parity with another bank, like we would not exist, right? The competitive sustainable advantage for EQ is all in its product, and our ethos is very much tied to value or price. And so it's no fees. and very high interest rate, and then trying to eliminate some of the constructs that have existed in Canadian banking. So we've combined the notion of a savings account and a checking account. So now you can transact from you can always transact from your checking account, but you're doing it with no fees, and you're earning interest on the dollars in the checking account. So there's no need for this savings account that you manage and have to like move money back and forth from. And so I guess product and that ethos of value is kind of what we built the business on. And so, yeah, super critical for us. I think that being said, I think no fees on a monthly bank account, no monthly fees on a bank account is table stakes, but I don't necessarily think that every fintech needs to win on value or price. It's that whole like fast price, like fast cost and quality triangle, and you pick the one that you're gonna go hard on, or two, but you can't really do all three. So for us, I would say it's definitely price and quality.
Okay, great. Abdulah, on the B2B,
Yeah,
how do you see that?
on our side, we don't have two clients that are the same. And that's why. So we do have like standard pricing. This is what it looks like. This is how the standard pricing, the price list is, because this is the value that we know brings to the client. We know how much they're going to save by using this product. So that's there is that standard pricing, but it's actually negotiated and discussed with the client every single time. So as part of contracting, we will discuss, what is the best model for them. So we'll have clients that want to have a license model, where they'll buy the license and then they'll use it for as long as they want. Some others want to focus more on to have it a split model where they pay a fixed upfront fee and then some recurrent. And then some clients say, well, no, we want to kind of remove ourselves from any liability upfront. So we want to minimize the amount of impact that we have. But the more the business grows, the more we want you to charge. So we do have different models. We'll work with the client to make sure that it's the best one that fits their needs.
Okay, cool. We're running out of time for the panel before we get into the Q&A. By the way, for everyone listening, if you do have questions, feel free to write them out in the chat. I want to know for the startups listening this evening, because most of the time, at least to my knowledge, they don't have a team dedicated to customer experience and can outsource surveys to gather the NPS. Whether they're a fintech, trying to create B2B partnerships with banks, or they're going for a customer acquisition play. Would you have any advice for young fintechs that are starting up who realize the importance of offering a great customer experience, what they should focus on? Maybe Corby, we'll start with you for this one.
Yeah, I'm a huge believer, especially in the Canadian landscape, that there's a real opportunity to create partnerships and synergy. I think a lot of fintechs get all jazzed about, like, we've built really good product, really good experience, really good platform. It's fast, efficient. There's low customer effort, and then they're like, oh crap, it's really expensive to get marketing going because you're competing with like everybody, right? And so that's expensive. And so customer acquisition to me is most likely going to be one of the trickiest points. So don't be afraid to partner. Don't be afraid to create relationships with companies that maybe on the surface look competitive, because you got to remember the large organizations are not good at something you're generally good at, which is nimbleness, adaptability, and listening to their customers and building that into the product, right? So like all the things that you're good at, there's a huge opportunity. So, take a bold approach, trust in your product, trust in your IP, trust in the fact that if they could have built it and beat you, they would have, and they didn't. So like, I think that's a huge opportunity. So don't blow all your money on marketing when it's really going to be more money than you think it is to get somebody like any one of us Joe consumers to trust you to put our PII, our money, our livelihood at the risk of your even existing tomorrow. That's a big thing. So use the big players for trust and growth. And I think it'll also open
What's
up.
What's the benchmark right now on the cost of customer acquisition in the financial
industry? I mean, again, product with, listen, I mean, I just don't think you're going to get somebody even with a no fee really good, high value, unlimited use checking account. It's, you got to remember with your incentive dollars and your search budget or whatever it is that's going to be the converter, you're still into the few $100s on a head, right? So you got to think about the revenue on that to return on that investment, even in a 1-year play. When you have no fees, you're relying on interchange. And by the way, are you primary wallet? Are you secondary wallet? If you're not primary wallet, and I doubt most of the startups are going to get to that phase, depending on what their product is, it's really expensive.
Abdulah, any thoughts on your end?
Yeah, absolutely. I'll go back to something I think Corby said earlier on. I think the main focus needs to be from any startup, anybody that's starting off, is the know your customer. You need to know that customer, define the personas, validate them. You need to know them, know exactly every single thing that they do during your day, and collect the customer feedback. And I'll kind of finish up with an anecdote. One of our clients, so we were focused when we're talking to corporate clients. We do have 2 parts of our business. There's automating payments, and then there's the cash management, where we provide visibility into accounts for the corporates. And we always focused on the payment side. So we always focused on automating payments. We thought that was where we're kind of saving up on money, saving them up as much as we can. And at some point, I just talked to one of our clients and I said, well, this is what we're focusing on. He's like, well, why are you guys focusing on this? This is, for me, it's a nice to have. It's great to have. But where I'm saving most of my, where I'm getting the more value is the other one. I'm saving millions of dollars. And that's where I found out 2 things. First of all, is at the next contract renewals, I'm increasing the prices on this guy. Second of all,
I thought you said no.
No. Second of all is at that moment we switched our complete our marketing, our approach to sales and everything, and we started focusing on the second one, where we would come up to treasuries and we said, listen, you use our products, you're going to save hundreds of thousands of dollars, and we made a business case out of it. And within weeks, we already had people that were very inclined to signing right away with us. So it's really those small changes, just getting that quick feedback from the client is critical in the early days. Absolutely.
Mahima, any last thoughts for what startups should focus on?
Yeah, I mean, I think given the budget reality, find a niche or a use case that's not being served well, and really understand the pain points in that journey, and innovate on that. Like, I don't think it's worth trying to be a one-stop shop. It's too expensive. It's too hard to stand out. Like, figure out that use case that's being underserved and go from there. I think you'd be surprised how successful some of the European challenger banks or fintechs have been. Like, TransferWise and Monzo spent less than $100,000 in marketing until very, very recently. So you're talking about like billions of dollars of valuation with almost like no marketing budget.
Yeah,
because they figured out that use case.
That's a great example. Okay, well, that's the time we had for the panel, but don't go anywhere because we'll go into the Q&A. And if I already saw a couple of people have been writing their questions. It's very small on my screen, but I see the first one from Mark, and Gigi, please correct me if there's others. But are the big banks doing anything that you're jealous of? From Mark Phillips.
Yeah, budget.
That was an easy answer.
Yeah, I think I'd use budget. I'd make it a little more granular, and I'd say having a whole lot of people to distribute the work amongst, so there's a lot of, on a bad thing for investors, it's called redundancy and waste. On a good thing, it's called like, you actually can manage your life and work-life balance. So I think, those of us in smaller orgs are a little more diversified in the daily activities versus, the larger banks that even when there's substantial layoffs can find, there's still a lot of efficiency based on the volume of people.
We'll move on to the next question from Andrew. Says, what are you seeing with banks, insurance, and fund companies trying to build their digital solutions internally versus going outside to a third party? Could it be cheaper but much longer to build internally? Why not pay for a turnkey solution to deliver?
So I'll take that one. So the way that we see it, and by the way, there are some banks that are outsourcing, looking outside to bring in something that is already built. But the way that we see it is that the banks, are starting to focus more on that customer experience, and they want to differentiate themselves through that customer experience. Now, if they outsource or they go outside and they get that third-party platform that they deliver on it, you'll start to see a lot of resemblance from one bank to the other. Doesn't mean that you can't customize it and it'll look and feel a bit different, but that experience will remain mostly similar between all those lines. For those banks, they're really looking to differentiate themselves completely. So that's why that additional budget to build it in internal to make it really their own becomes critical. Now, it doesn't mean that they're not going to partner with a fintech or bring in somebody that has the technology and work with them to customize it to their needs, customize it to the experience that they want to deliver. But that just kind of gives you a response to your question on why banks are still looking to develop some elements internally.
And back to Mark's question, he wanted to specify. Yes, obviously, budget is a considerable. There might be a considerable difference there, but in regards to the customer experience itself, anything that you're jealous of, or that you envy that banks are doing that is different than what you can do.
Yeah, I mean, I think just to go on, maybe make it more specific. I like the fact that with the volume of resources and sort of channels of delivery, they can truly be in a better situation to offer a much more robust number of choices to the customer. So if I wanna be in a non-linear email back and forth or text-based back and forth, the big banks can staff that and build that infrastructure. If I want to be in a real-time online chat because I'm like, got screaming kids playing video games behind me and I can't be on the phone, I can do that. If I want to pick up the phone, I want to walk into retail. I think it's choice, right? It's optionality that many small orgs have to kind of say. To the earlier point, like when you research and you realize 87% of your customers are here, you kind of maybe sometimes can't afford to support the other 13%'s choice, and you got to live with that. So I think that's the way I would think. It's really, can you staff the ship on an omni-channel experience and truly be integrated across all of them, and then have the technology and data infrastructure so that the next time I go online to chat or I pick up the phone, you can actually look up what was the last product I looked at online, or what was the last FAQ I read on your website, and truly shorten the customer effort to get to the resolution that I'm looking for. Like, those are interesting and pretty sexy things that I think smaller orgs are maybe a little bit more challenging.
I'd say from my perspective, and sorry, Mark, I totally interpreted your question. Payments infrastructure for me is a big one. I think all smaller orgs and non-direct clearer banks probably face this reality. It is insanely expensive to set up a payments stack. Like if EQ Bank wants to become a member of Interac to offer debit cards, it is prohibitively expensive for us to do that. And so what that means is that we need to leverage the big bank infrastructure, which most, like 99.9% of companies need to really leverage the direct clearer bank relationships. And there's only like 11 in Canada, I think. It creates inherent friction. So for every payment that gets processed on EQ Bank, we need to quickly send it over to a big bank. That big bank deals with the payment system and then sends back a response. Like, you're talking about it like 2-day delay there. And that is on top of an already inefficient Canadian payment system. So it might be 1 day if you deal with the big banks. Well, now it's like 2 days if you deal with EQ Bank. So I'm definitely jealous of their starting point there and access.
I was going to say, like, I always used to say, like, most organizations shouldn't get in the business of plumbing, and like all that stuff from a smaller fintech is plumbing, right? It's just like big banks are never going to build ad tech and martech connections into like the Google. They're going to leverage intermediaries. It's the same thing. Like, just do your stuff well and partner and lease and license. Where
so everybody open up plumbing or electrical companies, and you're all set and offer them a good experience. We have another question. This one tailored to you, Corby. Given goeasy's value proposition, do you think there's a need to create new products and delivery mechanisms targeted at Canadians who are in weaker financial propositions?
Yeah, I mean, so the core of goeasy's business is really, offering structured lending products to Canadians who maybe have lower credit ratings, and there's a couple of reasons for that. One, because often larger FIs will shy away from a bit more of a higher risk profile customer base if they don't need to, because there's a whole lot of other customers. But there's like 9 million customers that fit that profile in Canada, so it's a substantial third of the country. And I always like to say, a lot of people have poor credit ratings because 7 years ago they, like me, maybe forgot to pay a couple credit card bills when they were traveling, and then we just don't have the fortitude to call Equifax and be on hold for 47 minutes to figure out how. It's a pain in the butt. And so you have a good salary, you have good expense management, you own a house, like blah, blah, blah. You just never fixed your credit rating. So sometimes it's actually just, how do you help people get past a little stumble? And then there are people that actually just are struggling. And, you'd be amazed at the number of Canadian consumers who have and find themselves in that situation, yet want nothing more than to graduate back to that prime. And so whether it's goeasy or other organizations, how do you build products that actually are, again, client experience product in relation to your point earlier, Nicholas, are really designed, like, I don't know if you guys remember, there was a movie with Michael Keaton called Johnny Dangerously, and it was he was a gangster, and there's a scene where the other gangster threw him on a hook, and he's like, he's dangling from the door and he can't do anything, and he says, "My mother hung me on a hook once," right? And I like to say, like, our goal, if you're going to help non-prime Canadians, is to build products that make you our customer once. Because really what we're trying to do is give you the facility to take the loan, pay it back, report to the credit bureau, make it as seamless and easy as possible so that you can actually graduate back to prime and go through that financial education, literacy, and functional use of a product to get you there. So structured loans are one thing, but you got to think about what are the other products, and we, there's some stuff coming in the fall. Not the fall, in Q1 that are going to be exactly to your point, very expansionary and helping people achieve other aspects of their life when they maybe are being told no by the big FIs. So it's a huge opportunity.
We have 2 more questions to tackle. The next one from Tariq. I would say there is more of an opportunity for fintechs to work with organizations like EQ, goeasy versus the Big Five.
From my perspective, definitely. I think there's a bit of a trade-off, right? If you can get a partnership with a Big Five, you're looking at huge volume on day one. The problem is the time and effort and cycles that you're going to have to go through to actually get that partnership is probably going to eat up all of your funding. And I've unfortunately seen many fintechs get stuck in this loop where it's like, let's do a POC, and okay, so it takes 1.5 years to do a POC, and then they only give you like 1,000 clients to POC with, and it's not necessarily successful, and then with EQ and I'm sure goeasy and smaller FIs, our perspective is like, we're not going to be able to build everything ourselves. Like, we don't have the scale and we don't necessarily have the expertise outside of deposit products. So let's build the things that we're really good at, which is deposit products, and then let's partner on the other things. And the cycles to actually get that partnership and our openness to partnership is, I think, much better than the Big Five from my experience.
Abdulah, I'd love to hear you on this point, since you're in it day in and day out. What would you tell startups looking to partner, Big Five or smaller FIs, credit unions?
I think they both have their advantages. I think, well, personally, I like more the smaller FIs, credit unions. I find that the relationship is more of a win-win approach, where we're kind of both looking at this and say, well, we can both benefit from this relationship and try to build it out. And the Big Five, I mean, it could be a win-win approach, but you need to provide a lot more value, and the bank is looking a little bit more at you and saying, okay, well, you need to provide me value for me to convince me to jump into this relationship. So there, obviously, if you do, then there is the upside of, yes, you have access to a bigger pool of clients. You have, access into a bigger banks to upsell, to increase your space in that big bank. But personally, I do prefer that relationship with the smaller FIs. I mean, again, still we're talking smaller FIs. They're still huge corporations. They still have they're still like EQ Bank number 9. It's still, these are still very big financial institutions as well. But that relationship still becomes a little bit more personal and a little bit more. The approach is much nicer to have.
Perfect. And then the last question: what are the options after the pandemic? The options after the pandemic. So I'm not sure in which direction this question is going, but I guess options of the customer experience, perhaps, or maybe I'll tailor it. And if while they're answering it, you want to perhaps add on to that question to give us more context, I'll ask you. So obviously, COVID has changed a lot in everybody's lives. How do you think these customer experiences will change, maybe for your organizations and then throughout the industry in general? I feel the word digital will come up in one of your answers.
Look, it's been interesting is we're completely digital, we're mobile first. And so from a product development, customer experience development, I haven't really seen us have to make trade-offs tied to the pandemic because we're working remotely. So I think we're really lucky that way. I think the one limitation is we are really missing that opportunity to collaborate live. Like there's doing so much Post-it note layouts you can do on a digital screen. And so I think some of the harder like conversations or brainstorming pieces to really crack that nut, I think like some of that has been deferred. So I'd love to be in a place where it's safe to do that again. But I think overall, we haven't had to make sacrifices.
I'll second that. So on our side, life hasn't changed. So for the client and the client experience, it has not changed a bit before and after COVID. Like, I mean, we were already built for that resiliency to be able to work from anywhere. So there was no change. It was just getting used to it, and that's just nothing changed from the customer experience side. But our approach to marketing, our approach to that customer relationship that we're trying to build, and we used to meet them once a month in person, whereas now everything is digital. That relationship doesn't deteriorate, but it's just it's a little bit harder to maintain that relationship at a distance. So I'm looking forward to being able to meet my clients soon enough. I mean, I used to fly to Toronto to New York every other week. I haven't, I could still fly there, but I mean, nobody's in their offices to meet. So that's looking forward to getting back to that personal relationship and getting that back on track.
I think we could all agree with you on that one.
Come visit us in our homes. I would just say I think the biggest transformation for us as an org is for those orgs that are still fairly rooted in a strong retail experience, as goeasy is with like 450 retail locations across the country that really are in smaller communities. They're part of the community. They're like a center of investment and a charity and of events. Transitioning from that is something that it takes a bit of time to figure out, like, how do you maintain a connectivity to your customer base in a community when you lose the physical, that you've been dependent on the physical. It's one thing if you're starting in an online world, it's another thing to transition. So I think, you're seeing even the big FIs try to figure out, it's not a bank branch anymore, it's an investment advice center, right? Well, what does that mean? In Europe, you've seen like Santander do some interesting stuff, making free workspaces to compete and give away, coffee to compete with your WeWorks. But does that really grow business, or is that just like a good to do? And that's where scale and money helps, but you really have to think like, what's the objective of that? And so I think, the transition from a traditional retail-based business is really I think that's where the big FIs.
Perfect. So I think the key takeaway
next couple of
for
years.
listening to your customer and figuring out, well, making sure you're not just getting them a faster horse, but figuring out what the best product or solution is for their needs. But having that dialogue is key. Mahima, Abdulah, Corby, thank you so much for taking the time to join us this evening. It was a real pleasure to get to speak with you. And I think on behalf of the whole Fintech Drinks team, we appreciate your time, and I hope for the audience, everyone listening at home, you've got to get something out of this panel. So for panelists, thank you so much. I'd invite you, you could now leave the stage, just wrap up before the networking session. So thanks, guys.
Thanks, everybody.
All right. So just to conclude, I would like to thank our sponsors who've made tonight's event possible. Big shout out to EY, Expertus, goeasy, and Finovate for their support. I'd like to ask you to share your feedback. We also do NPS scores here at Fintech Drinks. It's important so we could offer you the best experience despite it being online from home. You'll see on this side of the screen, you'll see your chat, but to the right, there's another tab that says poll. If you could go to that poll section and just let us know what, I don't see the poll there. Hopefully it's showing up. If not, if there's no poll, you could just write in the chat 10 on 10 if you did enjoy it, or let us know your feedback. We'd great. Oh, I see the poll now, so it should be there. So from a score of 1 to 10, how likely are you to recommend Fintech Drinks to a friend? Please do let us know. We have the last Fintech Drinks of 2020 coming back next month. It's the end of year edition. 2020, innovate or die trying. We kind of spoke about it a bit throughout. This year has been pretty wild. We started off the event in person in February and then had to shift to an online model for everybody. It's been a whirlwind of a year. And we have a fantastic lineup to speak about, well, looking back at 2020, what happened, and then looking forward from an FI perspective, from an accelerator perspective, and from a consultancy's perspective, where the financial industry is headed. So we're excited to welcome to it Daou, is the VP and Managing Director of NA Ventures at National Bank, Jan Arp, Founding Manager Partner at Holt Accelerator, and Tamara Zimmerman, the Head of Innovation and Wavespace at EY Canada. So we hope you could join us. We'll be sending you an email with the link so you could already register for that. And now we move on to the last part of the evening, which is the 3-minute networking. So on this side of the screen, you'll see networking is now live. We invite you to go, you just join, and you'll be meeting with other people from the community in 3-minute portions. And we hope you enjoy and make some meaningful connections. So that's everything. Thank you so much for joining us once again for another Fintech Drinks. And we hope to see you again next month. Take care, everyone. Thanks.